Today's session for Opendoor might not have looked like a blowout on the surface, but sometimes the most powerful market messages come in quiet, controlled moves. After an early tug-of-war around the $9 mark, Opendoor stock showed real resilience, finishing just slightly in the green, up 0.5 cent for the day, after hitting an intraday high near $9.47. To some traders, that might not sound like much. But for those watching the bigger picture, this session felt like confirmation that something has changed in the underlying structure of this stock. That buyers are beginning to defend levels with conviction. That dips are being met with accumulation, not panic. It's easy to overlook that kind of subtle strength when the headlines aren't screaming. But make no mistake, holding steady after a double-digit surge the day before is a statement in itself. The market tested Opendoor's resolve today, and the bulls quietly passed the test. And while the charts showed that quiet resilience, the leadership narrative from inside Opendoor was anything but quiet. CEO Kaz Nejatian posted 2 powerful messages on X today, and they couldn't be more symbolic of where this company is headed. First, a photograph of a framed Wall Street Journal article hanging right in the company's foyer. Not just any article, but one that was bearish on Opendoor. The same Wall Street Journal piece that questioned its viability in the housing market, the one that doubted its comeback story. And there it was, literally framed, turned into art, turned into motivation. That image captured the new spirit of Opendoor perfectly. It's not running from criticism, it's framing it, owning it, and turning it into a rallying point. For anyone who's followed startups and turnarounds before, that's a telltale signal of leadership confidence. When a company stops fearing public scrutiny and starts using it as fuel, it usually means the internal belief is back. But Kaz didn't stop there. He followed that post with something that points directly to where Opendoor is heading next. He wrote, and I quote, "I'm looking for a designer to join our team at Opendoor to build the next generation of buyer and seller products. This is a chance to define an entire AI-forward user experience." Now that might sound like just another job posting to some, but for those who understand how product transformation works, that one sentence is huge. Because this is the first time Kaz has directly signaled that Opendoor isn't just talking about AI or efficiency in abstract terms. He's making AI a lived experience for customers. He's turning Opendoor's technology story into a human one. If you think about what made Apple or Tesla game changers, it wasn't just innovation in hardware or algorithms, it was the user experience. It was how the technology felt. And that's exactly what this new designer hire implies. Opendoor wants to take the friction, the anxiety, and the complexity out of the home buying and selling process, and replace it with delight, a seamless, intuitive, confidence-building experience that could reframe the entire housing journey. And remember, Kaz didn't say UI. He said user experience. That's an important distinction. It means the company is thinking beyond visuals. It's thinking holistically about how buyers and sellers feel at every step. It's designing emotion into technology. Combine that with what we saw last week, the launch of new buyer-side benefits in Dallas, like a 7-day home test drive and a 100-day warranty, and you start to see the pattern forming. These aren't isolated updates. They're building blocks of an entirely reimagined Opendoor ecosystem. Now, let's circle back to the stock action, because today's quiet green finish carries more weight than it seems. Over the last 2 weeks, we've seen a lot of chatter about short interest, institutional positioning, and insider alignment. We know Jane Street disclosed its 44 million share position earlier this year. We know Eric Wu has now made not 1 but 2 insider buys since rejoining the board, his most recent being over 300,000 shares at $6.65. We know that major hedge funds and quant shops are circling the name again. And today's session, where the stock absorbed selling pressure early and still managed to finish higher, tells us that those big players might still be adding quietly. It's the kind of market action you see when accumulation is taking place under the surface. Volume fades, volatility softens, and the stock begins to behave differently, less like a meme trade and more like a conviction trade. There's also that psychological element at play now. After such a powerful run last week, bears expected a breakdown. They didn't get it. Instead, the stock found a floor around $9 and fought its way back. That resilience eats away at short-side conviction. Every day that Opendoor refuses to collapse, the risk of a cover rally grows. Now, it's not about claiming a squeeze is imminent, it's about recognizing that the structure of this trade is shifting. When insiders are buying, leadership is signaling, and institutions are holding firm, it's not a setup most shorts want to fight indefinitely. But perhaps the most underrated part of today's story is the tone Kaz is setting internally and externally. Think about this: he's framing a bearish article in the foyer, signaling confidence to employees. He's publicly recruiting top-tier design talent to make the product feel as modern as any consumer app in Silicon Valley. He's transforming Opendoor from a misunderstood real estate company into a story about craft, technology, and culture. That's how leadership changes perception, not through PR spins, but through symbols and hires. And the street is watching. Now, we haven't seen any SEC filings yet to confirm whether there was another major institutional purchase behind Monday's rally, but that's often the nature of accumulation. The filings show up later. What we can say for certain is that the narrative tailwinds are stacking up. Media outlets that once dismissed Opendoor as a house flipper are starting to call it a growth stock. Analysts are mentioning it in the same breath as other tech-enabled platforms. And this conversation between Kaz and Robinhood CEO Vlad Tenev about potentially enabling crypto transactions for home purchases, that's a paradigm-expanding idea. It tells investors this company isn't just modernizing real estate, it's re-architecting it for the digital age. It's hard to overstate what that means. Imagine a world where a first-time homebuyer can browse, make an offer, finance, and close on a home all through a tokenized, AI-driven platform, one that feels as natural as shopping on Amazon. That's the dream Kaz is hinting at. And with his fintech background and relationships across the tech ecosystem, that dream doesn't feel far-fetched. And here's the key point: every hire, every post, every signal over the last few weeks has been about building for scale. You don't frame your critics, recruit AI design talent, and hint at crypto integration unless you're thinking big. Unless you believe the next phase of your company's life is going to be defined by growth, not survival. That's why Tuesday's market action is so fascinating. In isolation, a half-cent gain means nothing. But in context, after a 14% rally the day before, after days of volatility, after a leadership week packed with symbolic and strategic moves, it means everything. It means the market didn't fade the story. It means buyers are staying engaged. And while the broader indices were choppy, Opendoor held its ground. That's not random. That's relative strength. Now, we always want to stay grounded in realism. Housing macros still matter. Interest rates, mortgage data, and seasonality can all influence short-term flows. But the long-term value narrative, the idea that Opendoor can redefine how Americans buy and sell homes, is stronger today than it was even a month ago. We've now seen it with our own eyes: a CEO who engages publicly and fearlessly, insiders who are putting their money where their mouths are, institutional investors who are quietly showing up, and a product pipeline that's moving faster than most expected. The question now isn't whether Opendoor can survive. It's whether the market fully understands how much it's already changed. When you put all these puzzle pieces together, resilience at $9, a framed Wall Street Journal headline that's been flipped into motivation, the push for AI-driven UX design, the expansion of buyer programs in Dallas, and the subtle institutional accumulation, it feels like a company reclaiming its identity. That's why I call today's session a quiet resistance day. Because that's exactly what it was. A day when Opendoor resisted gravity, resisted sentiment, and quietly reasserted its story. For investors, that kind of day matters. Because it's often the quiet sessions, not the euphoric ones, that set the foundation for the next leg higher. So, heading into the rest of the week, here's what to watch. First, volume patterns. If we start seeing tighter intraday ranges with volume contraction, that's a sign of base formation. Second, look for any hiring announcements or design team reveals, which could signal that Kaz's UX push is already in motion. And third, keep an eye on the broader housing and fintech narrative, especially around crypto integration. Because once that narrative gets traction, Opendoor moves from a real estate story to a digital asset story, and that changes everything. The market doesn't reward noise. It rewards direction. And right now, Opendoor is showing both quiet strength in price action and bold signals from leadership. If you've been following this story for months, you can feel it too. The tone around Opendoor has changed. It's not desperation anymore, it's determination. And that's exactly what you want to see from a company that's clawing its way back from the edge, a leadership team that believes, a shareholder base that's growing more loyal, and a stock that refuses to give in. So while others are trying to guess whether today's bounce was technical or emotional, I'll leave you with this: sometimes resilience is the catalyst. We'll see where the next few sessions take us, but if today is any indicator, Opendoor is no longer reacting to the market, it's starting to lead it again. Because when you can take a bearish article and turn it into wall art, that's not just defiance, that's identity. And that's what winning stories are built on.